Hello guys, hope you all are well. This is my first video in this channel, but this will be in another section. I will start a new section where I upload step by step videos to give you lesson and to teach you how to be a profitable trader. So, so the main thing in trading is you can tell bias is the main thing. First you have to know the direction, then you can tell the liquidities and the entry modules. So I will prioritize the bias because bias, yeah, I think bias is the main thing here. But first, understanding the bias, you have to learn first the POIs, point of interest. So if I cover this point of interest in bias class, the video will be so much longer. So that's why I make a separate video. So let's start. And sorry for my English. English is my not fast language. So please forgive me if I mistake something. So guys, let's start. POI is the thing. Is it's a level or zone where market big players put their orders. Big players push their orders in these levels. The market moves and came to this level and take these orders and move. So POIs is important. Many of you have already known the POIs, but those who don't know the POIs are for whom I explain this video, the POIs we are using. Mainly we use for bias, order block, FVG, and breaker block. These three types of POIs we use in actually I use on daily bias or bias you can say, and uh, you can see the rejection blocks, mitigation blocks, reclaim order blocks, advance order blocks. These are for entry. These all are for entry zone, and this will also used for entries, but these will also seen for daily bias or bias. So let's start. Don't make this video so long. Okay. Okay. First, what I tell you, what I tell order block. Okay. Let's first explain FVG. Let's first explain FVG. See, this is the first candle. I will try another one. Wait. Suppose this is first candle. This is second candle, and this is the third candle, and this is the wick. Okay, so the first candle, second candle, and the third candle. The gaps between the first candle and the third candle. Okay, suppose the I see there is a gap between these two candles. This first candle, third candle gap is called FVG. Okay, this is the FVG. Okay, let's see some examples. Let's see some examples. See, uh, this is the first candle, second candle, third candle. The gap between these two candles is called FVGs. This is FVG. Again, I can see first candle, second candle, third candle. The gap between these candles are FVG. Again, first candle, second candle, third candle. The gap between these three candles is FVG. So you can see the only gaps between three candles is called FVG. Another FVG, and this is also a FVG. This particular area we called is as VPR. Let's add one and one POI more in here, FVG and sorry, and VPR. Okay, VPR. Okay, I will tell you later sometime, but this is not important right now. Mm, okay, again, the first candle, second candle, third candle. The gap between these candles is called FVG. Again FVG. Again FVG. Okay, this is FVG. And now let's move to the another one. Now you see the FVG, what we call the FVG. Now let's see what is order block. The order block is the previous candle, the first candle is we called the order block. Okay, the first candle is order block. Now let's see an example. So you see This is the gap, and this is the fast candle, which we called the order block, the PY zone. See, the market came to this level from here and tap this level and move all the way up to how much points? 2500, almost 600, 2600 pips. Market moves from this level. Big monies are placed their order from here, in this order block. So when the market came to this level, the order is executed and price will eventually go up. Let's see another one. When this is the order block and see, this is the first candle, this is the second candle, this is the third candle, and the gap between these candles are FVGs, are FVG. And the first candle is called order block. Okay, first candle is order block. What market did? Just tapped and key how much? Again 2600 almost. So this is called POIs, higher market came, higher institutional orders placed and big money's orders placed in these levels, in these particular areas. Higher market came to this level, the orders are executed, will execute and change its direction, give you certain moves. So let's find out some more. This is order block. You can clearly see market will came and go again, again. This is order block. All the order blocks are not real, so you can actually see in lower time frame which order block will actually give you the move. So we see that thing, the order block is workable, is not workable in this lower time frame. So this is the order block, this is again the order block, again which one, this is the order block. Okay, there is no averages, this level, current area, market will eventually come to this level, this is the averages. So now I think you cleared about what is FVG and what is order block. Now another thing, this behavior I will explain next video. I will just explain in this video these three POIs. Then breaker block. What is breaker block? First, know something that you can tell this cross candle, second candle, third candle, the gap between this candle is called FVG. Suppose market is coming from this levels. Okay, market is dropping like this. But you can see this is FVG and this is the order for selling. So eventually market, we can see the market will came to this level and move, or either came to this level and move downside. This is what we expect, but sometimes it actually don't work and break this level and came to retest this level, and from there we can enter our positions. Okay, so when a order block was broken, it turns into a breaker block. Okay, then market will uh, react like this, here, here, break and just retest, and they will. So let's see an example. Let's see an example. Let's see. Okay, I find something here. See, this is the first candle, second candle, third candle. This is the gap, FB. This is the FB, and this is the selling order block. This is the selling order block. What market have done? Market came from this level and go there and move a little bit and cleanly break this level. Then what? It came to retest this level, and from here it moved upside. It gone so long. That's why I use this as a bias, because these are good. This is a good level for bias. Good to see a bias. See, 10,000 pips. 10,000 pips from this level. Let's see if we can find another thing. Make a screenshot. Take a screenshot because it will help you understand. I will recommend you to practice at least hundreds of FVG, hundreds of order block, and hundreds of breaker block, and see what market actually do from these levels. Every POS will not work actually. Okay, we can see some confirmations in lower time frame. So mark and observe, watch how it actually moves. Okay guys, let's find out another example. Let's see. Here is another. Here is a good one. Okay, so this is first candle, this is second candle, and this is third candle. The gap between this candle is average, and the first candle is out of block. So from this level, what we expect? We expect market will came and retest this level and break this level. But what it have done, it came to this level but didn't break this level, and from this order block, if you didn't see, I will mark. Okay, from this order block, it again changes direction and going upside, and tap this level again, and again. Then at last it broke this level and a selling order block broke. Then it turned into a breaker block. Then what happened? Market will again come to this level. Look, broke on 22 December, and 23, 24, 25, 26, 29, 30. So almost 4 5 days later, it came and retested this level, and from this level, and from here, it again going bullish. Look, we see two breaker blocks, one after another. So I think you guys understand. So make sure you practice this and learn these POIs, which will help you. We need to understand the POIs for the bias. So first, clear the POIs. Hundreds POI, and observe how this actually moves from gives more from these levels, particular areas, because this is the levels where the big orders are placed. and market will change its direction from there.